Gold is just continuing to consolidate here. That's fine. The more it consolidates, the healthier it becomes. Eventually, you guys know what I think, whether it pulls back here or goes like this, eventually it goes to the upside. Bitcoin is grinding up a little bit here, so we are seeing a little bit of a gain on Bitcoin. The level to watch here is just above 35,000. Again, this is just kind of a bullish pattern, so not surprising. For me, again, I am short a little bit above 35,000, but it's only about a 1/5 position. So I would say every 3,000 or 4,000, I will add a little bit to that short side. Again, I was long here, right? So let's talk about where the trade was. So I got long in this vicinity right over here. We took half off here. We took half off at 34, and then I shorted up here, and we're basically a little bit in the money still on this. But essentially, my thing is, yes, I think the spot ETF is going to get approved. That may cause additional upside, but my guess is it'll be a blow-off top, and eventually it comes back to the scene of the crime, and that's how I'm going to swing trade it. That doesn't have anything to do with a little hodl position that I have for the longer term, but that, again, is the angle on that.
The SEC's positive interactions, including editing and commenting on spot Bitcoin ETF applications, alongside its decision not to appeal the grayscale verdict, strongly indicate an approval is imminent by January 10, 2024. With a wealth of spot Bitcoin ETF applications under consideration, including from industry heavyweights like BlackRock and Fidelity, the SEC's impending decision could herald a transformative moment for the crypto space. In the realm of cryptocurrency, the anticipation surrounding the approval of a spot Bitcoin BTC exchange-traded fund ETF has reached a fever pitch. Reports, albeit unfounded, of an approval have circulated, adding to the fervor. Bernstein Research, a subsidiary of the esteemed AllianceBernstein global asset management firm, has confidently asserted that the U.S. Securities and Exchange Commission, SEC, will yield to the pressure and approve its first spot Bitcoin ETF by January 10, 2024. In a comprehensive memo disseminated to The Street Crypto on October 30, Bernstein Research illuminated the market's eagerness to discern the SEC's next move, particularly in relation to the grayscale verdict. The SEC's choice to forego an appeal and its proactive engagement with the ETF applications, marked by edits and comments, have been interpreted as strong indicators of an imminent approval. Social media company X is now worth less than half of what Elon Musk paid for Twitter, according to internal documents quoted by the press. The billionaire investor purchased the platform, Twitter at the time of acquisition, for $44 billion last October. He has previously admitted to overpaying for it. Rich Dad Poor Dad author Robert Kiyosaki has recommended an investment allocation that he says may help you survive the greatest crash in world history. Noting that financial experts have promoted a 60-40 portfolio allocation of stocks and bonds, he stressed that people with this allocation will be the biggest losers. Let's continue our enlightening discussion with Gareth Soloway.
Behind me, there's an article, and I want to talk about this. So would it shock anyone to understand that we know the U.S. government debt, our debt essentially, what we're on the hook for as taxpayers here in the U.S., it is around $33.6 trillion now. But would it shock you to know that there's another $8 trillion in debt that we are on the hook for as well? And where does that debt come from? It comes from the Federal Reserve. I mean, what do you guys think happens, right? So when the Fed is taking on their balance sheet and raising their balance sheet, and remember, if you go back to 2007, before the financial crisis, the balance sheet of the Fed was under $1 trillion. It has ballooned to $9 trillion, and it has come back to $8 trillion. Now, you might say, well, that's the Federal Reserve. It's not part of the government. Kind of, but not really. Really, it is. And I want to show you this article here. The Fed pays U.S. Treasury $86.9 billion, largest sum in 4 years. This article, by the way, was posted a couple years ago when the Federal Reserve was running a bonus. So this was done in 2021. Now, the kicker here is that essentially what this means is that the Federal Reserve is paying any excess profits to the U.S. Treasury. In response, and by the way, that money then technically is taxpayer money because it's going to the government. We are the ones that elect our officials. We are owners of the government. We are a democracy here. But essentially what that means is that if the Fed were to take on more debt, then we are also on the hook for that. So what we have to do next is we look at the balance sheet of the Federal Reserve. Now, the Federal Reserve here, guys, very clearly, it shows that we have massive amounts of debt in the Federal Reserve. In fact, you can see right here, this was in 2008, 2007, We were below $1 trillion. I know it's hard to see this chart. I apologize because of the light. But nonetheless, look at the balloon, and here we are at $8 trillion in debt. Now, the big thing here is to recognize, okay, so what does this mean? Well, it means that if the Federal Reserve cannot get this off of their balance sheet and they are continuing to own it, and by the way, every financial crisis, look, and again, hard to see, I understand, but if you look at 07, 08, 09, we jumped here, and look at how we never retracted. They never paid it down, and then it ballooned in 2013-14, and then we had COVID balloon it even higher. Now, the kicker to this, guys, is that this, right? So, is that if essentially every time we have a bull economy, like we've had with GDP growing and, a great economy with low unemployment, if we all of a sudden only see a small drawdown, what is the end game for the Federal Reserve's balance sheet? And the answer is very simple, right? Eventually, it's going to go down a little bit, and then it's going to balloon back up. And so this, again, folks, I know it's not talked about, and it's not popular to talk about, but essentially this is additional U.S. debt that the consumer, that the taxpayer is on the hook for. And again, I'm honestly a little bit surprised. I don't see anyone else talk about this. Somehow we think, oh, the Federal Reserve is different. But no, folks, it is debt. And remember, this is adding the fact that we have 33, and by the way, this is the debt clock right here, $33.688 trillion in U.S. debt right now. And you can see the clock's going up. By the way, great website to track the debt. Probably too hard for you guys to see there. But the point is this, is that if you're a country looking to buy our debt, you just don't say, oh, the U.S. has $33.66 trillion. You actually have to look at what the balance sheet of the Federal Reserve is, because the U.S. taxpayer, the government, is on the hook for that as well. If the U.S. government is getting payments from the Federal Reserve when there's an excess, the U.S. government, the taxpayer, will have to bail out the Federal Reserve the same way. It's all one and the same, folks. It is all one big hodgepodge of junk that the U.S. government is continuing to rack up. So essentially what I'm saying to you is this. When the U.S. Federal Reserve does quantitative easing, when they print all this money for COVID, it is essentially the equivalent of the U.S. government printing all this money for COVID. All right? It's the same thing. And by the way, the U.S. government did it incredibly, and so did the Federal Reserve. So it was just excess liquidity, which obviously we're all paying with. Not only is it the highest interest, I mean, we're literally approaching $1 trillion in interest payments, but we're now at a point where there's way too much money in the system, and now they're trying to retract that by keeping interest rates higher for longer, and we see inflation, and we see all this crap going on.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.